If you're brand new, and even if you're still experienced, this is all good information for you. The entire thing is good information for you. This is in depth but very simplified so that you can understand it. You can see the data that has been collected that are all profitable, right? It's not hard to see. You can understand this, right? Some are less than some, and some are way more than some. Us as the mentors, we have our trade ideas that we put in here and discuss the trade breakdowns as to why we got into certain trades. Hello there and welcome. It is so good to have you here. I think you'll be pleased to know what you've just stumbled upon. At the end of this video, you will be able to be a part of the biggest moves, the best moves. Be prepared for the moves that are developed in the market by understanding the mechanics, understanding where the institutional footprints lead and come from, and then how you can use very simple tools to maximize your potential in earnings and in just positioning yourself in various markets. This works on all markets, whether stocks, indices, crypto, Forex, whatever it is that you want to indulge in. This here is like the prime essence of what trading is, utilizing the concepts and ideas of supply and demand, and then understanding how liquidity moves and is distributed throughout the entire market or accumulated throughout the entire market to be displaced in higher highs or lower lows from where it previously was. So all we're going to do is dive into this Primora liquidity playbook, and all I want you to do is pay attention to the stuff. Take notes. This is going to be a lengthy video, but take notes, because all of this here will be the footprint for your understanding, the blueprint for your understanding of how the markets actually behave and how they move, what you should be looking for so that you can be what? Prepared. So if you're liking it so far, all I asking you to do is literally, because this is all free right here right now, right? You literally at the end of this, you're gonna be able to just walk with this and make some money, and hopefully you do, so that you can come and join us and find a way now to just utilize the tools that we use to trade whatever you want to trade. Right? So if you're liking it so far, like the video, subscribe. You know what I mean? Do your due diligence. Go look at the other stuff that I've been teaching after all of this. But this masterclass here should serve you well. But I have a plethora of videos on YouTube that teaches the exact same thing I'm going to show you here now. But this is the most in-depth I'm going with it to show you exactly your potential of what you can do right now. So without further ado, let's dive right into it. So we start with market mechanics. So there's a very simple thing here for you to understand with all of this, right? Supply and demand trading is the practice of identifying price action where big institutions have historically bought, which is demand, buying, or sold, supply, in large volumes. If you're an experienced trader, you already know where I'm going with this. You can see where, okay, we're going to get deep into what supply and demand actually is, and then how you can utilize that within the markets, because you realize that that is actually what the market is. So very simply put, if you're brand new, and even if you're still experienced, this is all good information for you. The entire thing is good information for you. So let's get into this and show you here. So simply put, your supply and demand are literally down candles to show supply. Supply equals bearish. You can see a downtrend here. You see more down candles than you see demand, which is now buying. You see more supply in a bearish trend, downtrend, when there's a lot of supply and not enough demand. And now you see a lot more demand in a bullish environment when there's not enough supply. You're right. So picture in the wild, if there's only 10 coconuts left in the entire world, those 10 coconuts are going to be in high demand, right? So already you understand the concept. So whichever asset you're looking at, you can see whether or not people are buying it or if people are selling it. But there are buyers and sellers everywhere, and that's what the market is. On to this next thing now. To get into that deeper aspect of what this is, you have sentiments, right? So bullish sentiment, which means people are buying it over whatever course or period of time, works on all time frames. It just is what it is. And then you have the opposite side, which is bearish sentiment. These two are just the same, and it's all literally going to make perfect sense to you once I get into this, right? So yeah, you have your two sentiments, bullish and bearish, and that's just what that is. These triangles are here to kind of gel you into how we're looking at price, right? What we're looking for when you think about supply and demand, right? This is what our indicator kind of already shows you what you're supposed to be doing. And as you can tell, if you're in a bullish market, you're going to be buying, right? And if you're in a bearish market, you're going to be selling. So our indicator immediately shows that this right here is an area to buy from through that high. This creates a zone which can be now traded as a demand zone, because demand is what? Buying. Remember this down here, buying. So now if you have these squares, you can obviously understand from the swing high to the swing low. So from the swing high to the swing low, that's your swing low. And once it crosses the top right here, which is where this line extends and stops, once it crosses that, this entire thing is your demand zone, as you can see it drawn down here. This is in depth but very simplified so that you can understand it. Now that you've seen this for bullish and bearish, you can see how these zones are created. Even when they sometimes liquidate the lows from before, they now become bigger zones and continue. Let me show you exactly what that looks like down in here. So look at this. This is actual price. This is just a screenshot so I can show you exactly what the concept is and how you can understand it to utilize these tools and this understanding of trading, right? So as you can see, price starts to push up. We're not even getting into the MAs yet because that is way down in here where I'm showing you the MAs and entry plots. So as you can see, I'm giving you previews so that you can understand what's going on later on in the entire teaching, right, in the session. So if I get down in here and show you what these same squares look like in a practical environment, because it's good for you to understand everything, like in the actual practical environment and the theory behind it. So I'm doing both for you right now. I'm showing you both of them. You can pause this at any point in time, go back in your charts, just look at it, draw squares going up and seeing if they're passing through. Now you know you're in a bullish environment, and draw squares going down if you see it and you're in a bearish environment. So as you can see here, this to that, that's your swing high, swing low, and then your swing high traded through that. That's where you're going. Pay attention to where the plots are. I'm going to be showing you some different things as we progress, but this is the indicator itself. This is Primora, and this is what I'm showing you now to be a part of bigger trends, and you can understand it. So I'm showing you the basis first, and then I can show you how you can actually put it into the practical, put it into the work. So here you go, demand, bullish sentiment. Boom. You can see we're here with the squares. Don't even pay attention to the MAs right now or anything. Just look at the squares. You see the same concept of the squares pushing higher and higher, and you're still in a bullish environment. Supply is the exact same way. We're crossed under. As you can see, squares have already started to just manifest themselves going under and under. You don't need to be looking for bullish sentiments here yet until you start to get what? Your squares or your rectangles going upward again. If you're not getting those to go upward, you're never switching your bias. It's just so simple as that. All right, very simple put. And now that you understand that, I'm going to be bouncing around so I can show you, go back to these concepts and stuff like that so you can see. All right, this is the most beautiful thing that you're going to come across. Context, fractal, entry. I personally use 3 time frames. I learned majority of what I know from MentFX. If you don't know who that is the genius behind how I learned market mechanics, right? And then what I have done is simplified that system to make it where it was easier for me because of his teachings, maybe the way how he was jumping around certain stuff. It just didn't fully click to me until I did the work, as he said, put in the time, put in the effort, understood the concepts. And once I understood the concepts, that's when I said, okay, this is what it is. And then I simplified that in a version that would have made sense to me had I heard it from myself. So hopefully that's what this is for you. It's a clarification of what MentFX would be. And if you don't know who that is, then you're getting the best version of what he is already doing and has done, right? So simply put, now, and I've just made tools around that teaching, and then obviously from my own discoveries of certain things, I've made my own tweaks and now created a new system around that. So yeah, great. So context, which would be your highest time frame, fractal, which would be your middle time frame, and then your entry, right, which would be your obvious entry time frame, right? So from there you kind of understand that. I'll get into the time frames next. Let me just show you this real quick first, the time frame, and then get back up there. This would be your institutional footprint, right? So if we look at this really quick, your lower time frame combinations can be whatever. Mine right now, in terms of lower time frame and higher time frame, is remember, you can pause the video at any point in time, rewind, whatever, reverse, whatever. 1 second stop loss goes under 5 minute or over if you're bullish. So 1 second, 5 minute, 1 hour. Those are my lower time frame trading. This is what I use on a day-to-day basis to trade. So with that combination of time frames, you'll find trades every single day, especially if you have multiple pairs. You will just have trades almost every single day. Higher time frame would be 1 hour, under or over the 1 week, and then 3 month. I'm going to be showing you all of this. So even just on my actual charts right now, hopefully you can see this. This is my lower time frame chart. So this is on gold right now. 1 second. This is the 1 hour and then the 5 minute. So if you look at the crosshairs, you can see where that's that 5 minute candle right there. And then also you can see where the 1 hour is just this entire 1 hour candle right here. So some people would be like, oh, the separation of the time frames, that's too far or whatever it is. It's not that it's too far. Can you actually see the information, and does it make sense in correlation to the time frame you're looking at? Now, if you say yes, then that's the time frame that fits that distance, right? That gap. Sorry, I have the flu too. Anyways, let's make this thing work. So yeah, as you can see, this is that 5 minute push right here. You can see that 5 minute push pushing up right here. This is what that entire 1 second leg is. And yet that's exactly what this entire 1 hour candle just did. Pushed up all of this and pushed down all of this, right? So I'm going to get back into the theory behind it so you can understand how you could have been a part of all of that. So now you understand the context. Context would have been my 1 hour time frame. This is where I'm looking for my sentiment to understand. Okay, remember, sorry about the sniffling and stuff, but yeah, remember what I'm looking for are my sentiment to see if I am bullish or bearish. So as I can see right here, I'm fully bullish. So even if I'm looking for that now to break through, what would I be looking for? I would be looking for a buy opportunity all the time, because I can see my squares pushing up. What would I be looking for? Mercies. What would I be looking for? I would be looking for my bullish sentiment to be continued, right? That's just what I want. So therefore, what that means is on my 5 minute chart, I'm just looking for the same thing. Are my squares popping up? Okay, yes, cool. Then I go to my 1 second. What are these? Squares popping up, going to the upside, so I can be involved in this market here. So starting from my context, that gives me the okay. Then my 5 minutes says, okay, cool, I'm now matching my context, so now it's okay. And now my 1 second begins to match my 5 second context, which began to match my 1 hour. So that's how you use that time frame correlation. And then from there, you'll be able to do a lot with that already. What you can do with that is scale the type of RRs you're able to make, right? Very simply put, you're able to make insane RRs just by scaling down. And that's what this is for. This is the reason why I came back to this after. So context, now that you understand what I just said, context is your green, which would mean your hourly. Just giving you an example, your hourly or your 3 month, whichever one you want to do. And then your fractal, which would be your middle one, which is my 5 minute or my 1 week, if I'm doing higher time frame, is the red. As you can see, the structure and how it builds, because this is how price action actually looks. This is how it actually looks in the real environment. And then your entry time frame, which would be your lower, which would be like my 1 second or my 1 hour if I'm on a higher time frame. You can see where it's tiny, right? But it's the same movements of squares being built up and built up. So how you're going to view price scaled is, if I'm zoomed in here and I'm only trading on the 1 second, I'll never know that, okay, down here, when it started to make squares for me to sell, I would have never known, okay, don't sell there, just wait for new squares to pop up to go to the upside, if I did not know what my fractal time frame was doing in the bigger picture, or if I didn't know what my context time frame was doing in the bigger picture. So that's why you start with context first, and then that's how you're supposed to move. So let me show you this now. If you're going to enter through what I said was the sentiment, which is trading through the highs and going through the squares and stuff like that, And you know, as I said over here, to show you the squares is where you're trading through to go for a bullish. If you're going upwards, or if you're going bearish, you're going trade through the squares to go down. If you understand that, then you will now see the three different ways that you can get into a market. You can get in from your entry time frame, you can get in from your fractal time frame, and you can get in from your context time frame. How is that? Let me show you. If I go here, you see this blue box. That's your high, that's your swing low. This is where it traded through. That's where you could have entered. This is where you would have entered. Your stop loss would have been below here. Guess where that market goes? Way up here. Okay, you missed that one, and you didn't want to take this one right here because you said, okay, I'm only taking the first one that presents itself. I'll show you later on, yes, but I'll take the first one that presents itself so that I can be in the best probable trade for it to go for a very long run, right? Because even in comparison to that, look at this run right here, and then look at this run right here, and then you start to look at this one and say, holy shit, that's actually very far. Yeah, because that's the whole system. And then now, so say you got into that one there on the black line, remember your entry time frame, which is your dotted one, to show like a lot more entries. Yeah, that's that. And then now your fractal, which is your red. Here's that swing high, here's that swing low, which internally has your entry time frame doing a lot of swing high, swing low, swing high, a lot of different stuff in between consolidation and all this extra stuff, right? All this extra fluff. That's what this is. And then it starts to come back out of it. Once it comes back out of it in trades, your entry is right there, your stop loss is right under here. What would have happened? Came up, came back down, maybe tapped you out if you know, whatever. We're not gonna get into trade management right now. And then the final one is your context. You see that big push up, that big push down, same thing, swing high, swing low, and then once it traded through, that's where you're putting in your trade, and then your stop loss goes under. It's the exact same thing as this. Sorry, it's the exact same thing as this. Here you go, swing high, swing low, trade through here. Swing high, swing low. Once it crosses it, trade through there. Swing high, swing low. You saw it liquidated that. It's irrelevant because once it crosses this, this becomes another bullish zone, a demand zone. So now you trade through that. And that is how you end up staying in the market on the right side. Because remember, I showed you here. So bam, bam, all of these right here are bullish sentiments that you could have been a part of. And what time frame was that? Doesn't really matter, but that's the 1 hour. What do you think is happening here in a 1 minute or a 5 minute or 1 second? Come on, you see? So that's the beautiful part of this. Next, institutional footprint. Now I'm going to show you exactly like how it looks on the charts in depth from on this side right here. So you saw us talk about this earlier, which is the time frame framework, which is the lower time frame, higher time frame. So you start from your context, which is your main foundation. You get up to your fractal time frame, which is that 5 minute if you're on the lower time frame. So say 1 hour, 5 minute, 1 second is your entry, and that's the one that you pin. That's the pinnacle. So now that's where you blast off from here and then take your trade. Simple as that. Let's get down into this and I'll show you what I mean. Cool. So last supply candle. So now you can look on it like zones or the literal candle itself. Do not forget the mission and what I said earlier. A single candle is a supply zone in a downside, and a single candle in a demand zone is a demand zone. A single up candle is a demand zone itself, right? Because fractally you can break all these down. Like these could all be 1 hour candles, and what do you think 1 minute is to 1 hour? That's 60 candles. So you'll have a lot of different supply and demand going on in here. Simple, right? So now we get back down in here, and as you can see, that same concept. Supply, all this demand, like look at this zone right here. Sorry, excuse me. As you can see, this is a sweet push. That's a push. That's great. All of that is great. And then what you have after that is this push down right here, right? This is what creates your zone, because you already started to see that you started to break and push higher. See, this now is your zone. And as you can see, that wick is what poked out of there, right? That wick is what poked out of there, and that's what made you get into the trade right there. Boom, that, and then your stop loss goes below that swing low, as you've seen up here. Remember, the same thing I keep showing you, is the exact same thing I'm showing you. Bam, swing low, so you'd have got stopped out right here. This one here, good to go, right? There you go. And it's the same concept. So now let's look at it. If this is your first, if this was your last supply candle, right? Then you can understand that that was your last down candle. And now you need a what? Demand candle if you want to continue in the trend. So now I needed this to happen before I get into anything else. So that's just what we're looking at in terms of price, right? So I see the last supply candle. I need something else. What do I need? The first demand candle, which is the next one to prove that price wants to continue being bought from that area, right? So simple as that. I see that first demand candle. And then from there, what do I see? I scale down to my weekly time frame. So remember now, I'm using context. This is my context, the 3 month. I'm just showing you from a higher time frame perspective for this one. I'm using my 3 month. This is what my 3 month looks like. This is the analysis that I've created and said to myself, okay, cool. I saw that. Then I saw this. And now we're popping into this. I go down to my weekly time frame. This is what it looks like. First demand candle. First demand candle. This one candle is this entire price action on the weekly. You understand? And then first fractal demand candle is what this time frame did, because the last candle that closed right here was a supply candle, right? So what was I waiting on? Same thing I was waiting on over here, one demand candle. So this says what? First fractal. Which one is the fractal? Sorry. Which one is the fractal? The middle. So 3 month, 1 week, 1 hour. This is the fractal. This is the fractal, the red. Remember, same thing, the whole thing. Hopefully I'm not losing you here. All right. First fractal demand candle, which is this white one here. That's the one. This is gold, by the way. And then I zoom in now to the 1 hour. This is where the magic happens. So this is the same first fractal demand candle. So this one candle here on the 1 weekly, 1 week, is this exact price action here on the 1 hour. So you're just scaling down and looking at the same thing. I obviously did these all by live price by just showing you guys. So first fractal candle opened. This is where it opened, right? And once it opened or closed, same thing. So this is where it opened, right there. This is now where we look for the trades. So I zoomed in a bit so I can show you now, right? First fractal demand candle. Tell me, what do you see? Do you not see the same squares going up? So why would you ever look for a sell opportunity anywhere? You already have your 3 month going up. You have your 1 week going up and making demand zones, going up and making demand zones. Look at these. So why would you ever go on this and say, okay, well, there's resistance up here and it's supposed to short? No, just because you saw this. So now you're trying to short from all of this. This is how liquidity is generated, my love. My boy. This is how it's generated. So as you can see here, your triangles would have popped up how you were using our tools, Primora. And then you'd have gotten in right here again. What does that look like? That looks like this. One of these here with the squares, your triangle, and you got through there. Boom. This is exactly what this is. This is exactly what this is. You'd have gotten in on that plot right there, because that's where the square would have been on the smaller time frame, like on a miniature level. Square, pushed up, pushed up, pushed up, create another square, pushed up, came down, then made this entire zone right here and pushed up from there. Come on, I'm showing you the real stuff. So that's where you would have gotten in, as you can see. Now you could have put your stop loss in 2 different areas or 3 different areas. It depends on what you test for yourself and which one. I've found that putting it under the very low, the swing low, has worked for me. And this one right here, wherever the triangle pops up, that's where your square would be. That's where your high is. And now you're just waiting for the swing low. And then once it trades through that, you're going to put your stop loss under here. So if you did it under here, this one would have been successful. If you had put it under this one, which is the previous low, you would have been successful. And if you just did it under the overall low, you would have still been successful. So there you go. That's that. And this is how this looks now broken down. So as you can see inside of here, that's exactly what I just explained, so you can understand it. First fractal demand candle, so you can understand this is how the entire context looked, right? So this is how the entire context looked from top down. So here you go. Sorry about that, my phone. So as you can see, your 3-month candle pushed up, and then from that pushed up, you had your first fractal demand candle, because this was your first fractal demand candle, which was this. Sorry. And then now this is where your 1 hour comes in, and then it'll give you your triangle, and this is how you would have been a part of this move. And that move was absolutely crazy, right? I'm telling you, this system here is, you can't beat this type of stuff. So now you have MAs and entry plots. I'm going to show you this now, very simple, and you can see that we're on the final stretch of this. But I know for a fact you go on your charts and you'll be able to understand this 100%. Just look back at this again and you see it. You can't unsee it once you do. All right, cool. So from here now, we understand the MAs, right? The MAs that I use. Let me show you the tools actually real quick. So this is like Bitcoin right here. Let me show you the tools real quick. So Primora, if I open this, you can see that we have these that you can see. I can just look on it from this perspective right here. If I turn off the trigger MA, this would be the one that triggers the plots. If I turn the trend off, you can see, you can just make your charts really clean. If you believe you're bullish and you don't want to see any bearish triangles like this one right here, turn it off, you know, turn off your bullish triangles, whatever it is. If you just want the MAs, whatever it is, this thing here, you can really do some crazy stuff with this. On the inputs, you have your colors. Obviously, you change your colors. You have your bias display. So you have the bias that tells you right away up here, bullish or bearish. So you can't escape it. I mean, you don't end up looking for bullshit if you don't see your things lining up, right? So like right now on Bitcoin, is not printing the 50 MA yet because of how early it is in this market. What Bitcoin is it hasn't even started to print the 50 MA yet, right? On the highest time frames, like 3 month, 1 year and stuff like that, because we don't have enough price action here to even show us that. Anyways, so yes, we have the bias displays, as you can see here, right? Like right now, if I go on the monthly right here, you'll be able to see that we're bullish. We've been bullish on this. But anyways, just giving you an example. Get back into Primora. So you can see the MA values. So you can actually change the MAs, right? You can change the MAs to whatever you want. Like if I put this to 20, you'll see the plots change as well, right? If I put it to 20, okay, well, that one, they would have presented the same thing. So it's all subjective, right? If I did 6, you'll have different plots, as you can see there now, because those ones react a lot quicker. So you would still be able to catch like a move like this. But for me, I like catching the moves down here. You see like mine right here, I'd have caught this right here, pushing that right there, and then this whole thing would have been a part of, you know. And then of course you have losses. Everything is about probability. Do not escape the fact. You cannot escape the fact that the probabilities of winning and losing is a part of this thing, because that's what a game is. You have wins and losses. Now, are you winning more than you're losing? That's the question. Simple as that. We have a slope filter here, which is absolutely unique. So the slope simply means if you see that the MAs are moving sideways, more than likely you're consolidating, right? And obviously if you see your MAs starting to separate and move, creating divergence, you can measure those as well. So if I enable divergence filter, it'll only show me plots that match or meet the divergence that makes sense. So if I put 1, the reason why this plot now shows is because there's at least a divergence between the MAs of 1. Then it'll show me that, hey, I know that the MAs, when they spread, it means a trend is starting. Therefore, I only want to trade when the trend is starting, meaning I don't get any plots in here. Now you see the power of this tool right here, right? If I turn it off, you see where you have plots in between here. So you would have taken this and lost it. If you put your stop loss under here, you would have lost. You would have taken this one and you would have lost. and then you'd have taken this one and you'd have probably lost right now too, right? But again, like I said, if you did it on that level, I would have been entering here. My stop loss would have been under here. This next one entered here, stop loss under here. Because remember, this is the low. Entered here, stop loss under here. So 3 of these for me would have definitely been taken off and gone to the right direction. And don't forget, see how it looks over here on the weekly. So I'd have been doing it under the weekly low. See that candle right here? This is the candle low. So the stop loss is under the candle low. Think about it. So that's why I wouldn't have put my stop loss in here. I would have put it right under here. Beautiful. So you have a slope filter. The slope means once it starts to slope upward or slope downward at a certain percentage, then it'll start to plots. Otherwise, it just won't plot any of the triangles. So you won't be getting into trades, which means what? You'll be able to stay out of choppy price action. That is incredible. And obviously you can have your sessions, right? Just extra tools, extra stuff to put in there. And that's just pretty much that. That is what it is that you need to understand about the MAs, right? So in a bullish format, you'll obviously see price come from a bullish thing, start to consolidate, which means move sideways, then cross back over and start to separate from each other. Again, start to come together and then start to what? Separate from each other, whether in an uptrend or in a downtrend, right? Because if I flip this chart right here, invert scale, that's how it would look in a what? Downtrend. As you can see here, the same thing. Come up, cross, and then start to separate going down. Come up, cross, barely cross, or tighten up, and then start to separate going downward. So you could have been a part of any one of these, right? Just showing you. So now that's great. Now, the wider the divergence of the MAs, the stronger the trend. The closer, tighter the MAs, the likelihood of consolidation. Therefore, if you're getting into trades in here, you'll more than likely take losses. You want to get into trades when they're already pushing up like this. Like if I already know that the 1 week is doing this and the 3 month is doing this, I'm taking all of the trades that the 1 hour presents to me on the bullish side because it makes sense, right? Very simply put, I have data collected showing results from all of these. It's not hard. It's not rocket science. Sorry about that. But you can see the data that has been collected that are all profitable, right? It's not hard to see. You can understand this, right? Some are less than some, and some are way more than some. All right, yeah, sorry about that. So almost coughed out half my lungs. Boom, starting back again. You can understand this part here. This is your naked chart. This is how it looks. This is just on AU. I showed you different pairs, so you saw gold, AU, all different things. Doesn't really matter, right? So this is your naked chart. This is how it would look. Even just based on the understanding of you just using squares alone, you can just easily start to understand direction of trend. And then now moving on to what the indicator would look like with that, you start to use these now to start to get involved into the market, because now you know which squares would be the starting point of an uptrend in a micro environment of the same macro looking at it, right? Very simply put. And moving on to this now, this is the finale of it, so you can understand what this is. So remember now your squares, liquidity targets, that's what these are. All above them are resting liquidity. That's how liquidity moves. This is the liquidity perspective. As you can understand, even if you got involved in these parts of the market down here, you can see where this market continuously moved up and was still continuously moving up. Liquidity target, same thing. Even though you had that price come down here, you're not looking to sell. Why? Because guess what? Your higher time frame would have confirmed that you're still bullish. So you're just waiting on bullish opportunities to start presenting squares that keep on going up. And that's how you get involved with that. Here's the note. Your higher time frame bias has been confirmed. Your lower time frame price is above both SMMAs, right? You see prices above there, and then triangle plot has been confirmed. Now guess what? That makes this one eligible, this one eligible, this one eligible. All of these are eligible because you'll have this on any side of the trend. But you need to take the ones that are eligible, right? Trade through the micro highs, which are the plots. So this is the trade that you'd have gotten into if you wanted to get in on that, with the idea of putting your stop loss below the low. See this one here, you would have lost. This one here, you'd have still been in. and then now came back, tapped you out at break even. This one, same concept, tap you out at break even. This one, maybe tap out at break even, but this one here moves off and never comes back. So very simply put. Thank you. Right. So now that you understand all that and you've seen all of this, I know this will never leave your mind again, because this type of stuff is invaluable. This type of stuff here is invaluable information that you're going to use to become profitable. And you're going to be using this to get into various markets, various, whether you're trading with funded accounts, or if you're doing, my God. And with that said, now you're prepared fully now to actually go out there and make some money. So if you're ready, join the Discord. We have trades every day now, because obviously we trade on 2 different levels of time frames. Lower time frame, which is for daily trading, and higher time frame for like crypto or stocks and stuff like that, you know what I mean? So we're going to be utilizing these on a day-to-day basis in the Discord. Like, as you can see inside of here, we've been fully active, right? A lot of stuff that you can see here, just testing and showing the same systems over and over and over, having discussions on how we can actually improve the stuff and make use of all of the things. I have videos here for the beginner systems to teach you, like, even if you just start with a one-to-one perspective, you will already be profitable, like, heavily, and then you move on to 1 to 2, and then you gradually get into like trade management and stuff like that, which we haven't even gotten into, right? This one here is super crazy good. And then determining the bias and such like that. This is a lot of useful information for you to actually, you know, use and be a part of. Us as the mentors, we have our trade ideas that we put in here and discuss the trade breakdowns as to why we got into certain trades. You understand? I'd be fully transparent with everything. So if you like what you're seeing, join. Don't wait up. Peace.